And it's going to be presented by Judge Dennis Davis as a feedback from the Davis Commission on Tax, or Committee on Tax. And Dennis hardly needs introduction, but I'll go through his CV, which I was given. Dennis was educated at Hersdale School and the University of Cape Town in Cambridge. He has been a judge of the High Court Cape Town since 1998 and judge president of the Competition Appeal Court since 2000. He was previously Prof of Law at University of Cape Town, where he still teaches, and Witwatersrand, where he was the Director of Applied Legal Studies from 1990 to 1997. While at Wits, he was involved as legal advisor to the multi-party conference that drafted the South African Constitution. At the University of Cape Town, he teaches tax, constitutional law, competition law, and legal theory. Dennis is also a prolific writer and is the author of 10 books, the latest being Precedent and Possibility, The Use and Abuse of Law in South Africa, together with Michelle Leroux, and some 150 academic articles on legal theory, constitutional law, taxation, labor law, competition law, administrative law, and South African history. He is busy with a book on constitutional values, co-edited with Cheryl Sanders and Alan Rector, to be published this year. He has held visiting professorial posts at Toronto, Melbourne, Harvard, NYU, Florida, Brown, and Georgetown. He's presently the chair of the Committee into the Tax System. He has also been a drafter of the Competition Act of 1998 and the Companies Act 2008. He is married to Claudette with 2 children, Leah and Joshua. And last of all, he is a concerned Manchester United supporter. So, Dennis, we welcome you to the podium.
Thank you very much. I'm quite stunned to see so many people so late in the day. I also found it really interesting listening to your gripe session beforehand, because when people sort of complain about SARS, you should try to know what it feels like to work when you have to deal with the Department of Justice, like we judges do, where your computers suddenly are shut off for a week, and I kid you not. So don't complain about 2-hour waits. The other thing is, I noticed that somebody said they have to pay a tax lawyer 50,000 rands, and I was wondering what that was for. Just a cup of coffee, or what have you? I've been asked to report back to you, or to some extent, to give you some idea of thinking of our committee, and I will do that to the extent that I can. Let me say immediately that those of you who know the work of, know the terms of reference that we were given roughly a year ago, just slightly less than a year ago actually, will know that it was really the entire gamut of everything which deals with tax. And we sort of decided that the only way we could deal with this was to divide up the topics and prioritize them. I had promised, and indeed we duly did, hand to the Minister of Finance a report on small and medium-sized businesses at the end of last year. I'm not sure why that wasn't. We don't have the power to publish that. We simply have to give it to him, and then he must do what he wants to do with it. And so that report was handed in December, and by the end of January we'd also handed in a report on the normative framework, which we thought would guide us, a normative framework dealing with the question of how tax policy should be governed. In the interim, because we handed those two and we've done further work on both, and in fact tomorrow we're having a full committee meeting to finally settle what would be the second further report on small and medium-sized businesses, which basically would, I hope, address some of the concerns that I've heard mentioned here with regard to compliance costs and the like, and also some further work on the normative framework, which will immediately then go as a sort of second addition to the Minister. In addition to that, we have almost completed a very, very large study pursuant to the OECD's request, as it were, for all nations to respond to BEPS, the base erosion and profit shifting initiatives that were launched by the OECD. That document hopefully will get to the Minister by August. It probably amounts to something in the region of 300-400 pages of work already done, which the Minister will have to digest. And then we're pretty close, I would imagine, again by August, perhaps by September at the latest, to have completed a VAT report. So within the first year, we would have done all of that, and that will all be handed to the Minister. We're also busy with a mining tax, which was a hugely sensitive area, as you can imagine, in this context. But that's quite early stage yet, and one has to tread very cautiously here. This is not an easy operation, given the broad nature of the country's position with regard to mining at the moment. And in addition to that, we also have begun and quite deep into discussions with regard to estate taxes and its relationship to CGT. And I would imagine those two further studies will occupy the minds of the committee for much of the balance of the year. Of course, there are other issues which have to be canvassed, including corporate tax, including administration, and a whole lot of things. But there's only one way you can do this, particularly when you've got a committee of part-time people, to do this gradually. But as I say, that's broadly our progress, and it's within that framework that I'd like to address you this afternoon by raising perhaps 5 points. Firstly, I want to say something about the tax structure. Related thereto, obviously the relationship between direct and indirect tax. Thirdly, something about estate taxes and CGT. Fourthly, about corporate tax. And finally, just a word or two about the base erosion and profit shifting. That's how I, if I may, try to address, just to give some content to what it is that we're doing and what the problematics are which confront a committee of our kind. I should tell you that I think, unlike any other committee that's ever investigated the tax system, we are doing a lot of empirical work. So let me give you, just as an illustration, why this is taking, some things will take longer. We've commissioned the World Bank to do a study for us on the VAT gap, meaning the difference between what actually should be collected and what is collected. Now, that's never been done. We never did this in the CATS Committee. It certainly wasn't done in the Margate Commission. And one of the things we determined to do right across the board, and I'll illustrate that again by some other features this afternoon, trying to drill down. It's no good doing a tax committee on the back of a cigarette box. You've got to actually know what it is that you're dealing with before you can actually conceive of sensible policy. It's enough now with the stuff of everybody having an anecdotal idea, because that's not the way in which you develop a coherent policy. And I'll illustrate that in a moment. But let me start then with the tax structure. And in this particular regard, I'm going to make reference to a study that the World Bank has just done on our tax system, 2014. It comes up with some very, very interesting features. And all I'm going to do is give you the broad outlines of what they were talking about and why this is of such significance to us. They worked on, and admittedly, the tax figures of the budget review of the previous year, 2013. So when they were talking about our tax system, they had obviously calculated on the basis of the 2011 year that the tax to GDP ratio was 25.2%. The total revenue to GDP ratio 25.2, taxes 24.7%. That was the ratio. And within that, 10.4% came from indirect tax, of which the vast majority, 6.9%, came from VAT. The figures are not hugely different and doesn't make much difference to the analysis that I'm going to give you. Within that particular calculation, and I should apologize for not having slides, but you know, I work as a judge, and as I said, we're lucky to have a computer, let alone anything else. So you know, if you guys paid some more tax, I'd be able to fill in all that. So I'm awfully sorry. Unlike you highly paid private people. Then the social spending, that is government social spending, is 17.6% of GDP. And that's very important. I want you to bear that figure in mind. So 24.7% of GDP is the tax on that basis, 17.6% is the social spending. And when they analyzed those figures, they came to the following series of conclusions. They said that the net impact of taxes and government spending in South Africa is a reduction in poverty and inequality. The size of this effect is larger than any other middle-income country that they studied. South Africa has the most redistributive system amongst the 13 countries that they assessed. And to illustrate that, they actually show you that if you look at the South African Gini coefficient, the coefficient that measures inequality, before you take account of any taxation, before you take account of any transfers, the figure is 0.75. It's unbelievable, because 1 would be total inequality, 0.75. After you take into account tax and transfers and distributions, as it were, of social goods, it goes down to 0.58. That's still very high, but the point is it is far more effective than any of the other middle-income countries, including Brazil, which has often been heralded as a remarkable achievement in relation to the way in which social transfers have reduced inequality there. So it's terribly important to understand that our system, with all the complaints we have, is actually making a dent on the vast levels of inequality that we inherited from 300 years of racism and some 50 years of apartheid. What they also found was that our direct taxes are progressive. They're progressive because they're having an effect. I heard somebody told me that there was some discussion yesterday about the fact that our taxes aren't progressive. Well, the answer is that they are. And the World Bank study, which is the most authoritative study we have, shows that in fact our tax system is in fact having an effect on reduction of inequality. Not enough, but that's not because tax can do more, because obviously there are other things that we have to deal with. What they also found was the burden of indirect taxes are high for the poor, higher than in most other countries. What in fact they mean by that is the following. If you take account of our VAT, you may say, well, so many foodstuffs are zero rated. So what are you talking about? But what they found was that if you look at the basket of consumption for the poorest decile in South Africa, total household expenditure in the poorest decile, only 36% goes to food. So if you then consider the rest of the 64%, most of which is vatable, then if you ask yourself the percentage of income which goes to VAT of the poorest decile in South Africa is vastly higher than any of the other 13 countries that they studied. Now, that's not an unimportant feature. So what we're saying is direct taxes are progressive. Indirect taxes have a situation where the burden on the poor is higher than in other comparative countries. Spending, government spending, compensates for this negative effect. And the direct and in-kind transfers, which go to make up that 17% of GDP, the guts of the budget, is having progressive effects. Now, I could bore you to tears with the details of this, but I wanted you to get that understanding. And I can assure you we will be publishing some of this material, because one of the things that has actually really got me going, as for a long time, is the poverty of financial reporting, the financial discourse in this country, the level of knowledge, because the rubbish that is spoken is just extraordinary. I mean, the only people who talk more rubbish are sports commentators. It is really quite remarkable, because when you start looking at these figures, you realize that actually the system is having an effect. If you say, well, it's only taken it down from 0.75 to 0.58, the Gini coefficient is too high, I agree. But the fact that it's doing something is a hell of a lot more than if nothing was happening. Now consider the effects that we've now got in relation to a tax structure. Number one, you've got a progressive income tax system in which the burden of personal income tax is enormously high on the richest decile. There's no question about that. If you look at the highest decile, 86.9% of personal income tax is paid by that group. So you've got a problem. You've got a Gini coefficient that's still too high. You've got a personal income tax which is overwhelmingly paid for by the highest decile. You've got a VAT system in which a burden on the poor, notwithstanding that the wealthy pay more, much more obviously, is still too high on the poor compared to comparative countries of economic development. And so the question arises, what do you do in the system? Let me make one final point. A lot of nonsense is spoken about what the optimum tax to GDP ratio is. I got a couple of submissions, our committee did, from various organizations. I don't want to embarrass them in public, although if they embarrass us, we'll embarrass them. And they say that optimum tax to GDP ratio is 19 to 20%. Now, I knew that was economic hogwash, but I went to the World Bank. Now, the World Bank, just if you may remember, it's not a Marxist organization. Right? The World Bank's a serious place. Right? And I met with 10 PhDs. I mean, it was amazing. There were 10 people in the room, all very senior people in the World Bank, all with PhDs in economics. There were probably more qualified sort of fiscal economists in that room than we have in the whole of South Africa. And I asked them a question. I said, so what's the optimum tax to GDP ratio? And they said, well, it depends on what kind of country you want. But for a country like yours, it must be close to 30% because you've got such redress. And so when you look at the question of our tax to GDP ratio, and you ask yourself, the vast majority of money is going to transfers, then we have to say, at core, the system is working. Now, I accept, let me say this, it's late in the afternoon, I know. And the one thing that will clearly keep you awake is the idea that one of the problems that vexes us is corruption. Now, I know that, you know that. Unfortunately, I don't know what I'm supposed to do about it in the committee other than shout about it. But quite obviously, that's a serious problem. It's a massive problem. It's a problem of such insurmountable consequences that I don't even begin to think that we puzzle the social consequences of just how terrible that all is. But with that in mind, outside of that, the structure of the system is trying to make these adjustments to our heritage and not doing badly at all. So the question is, there are two questions. One is, are you looking for more money? Well, the answer is no, one's not looking for more money. More money is not necessarily the point. Why? Because if we could reduce corruption, we wouldn't need more money. Right, number one. And secondly, thank you for being awake, it's fantastic. And secondly, there is more work that we can do on the gap. So let me turn to my second point, and that's VAT. Quite obviously, if you've got 86.9% of tax being paid by the highest decile, there's limited leverage that you can have in that regard. To be sure, there's pressure, and I'll come back to that, for having a super tax for very wealthy people. And very wealthy people generally, when I ask what the definition of that is, everybody above me. That's generally what people say. But there is obviously a situation where, let's say, 5 or 10 million rand a year, shouldn't people be paying 45% marginal rate? Well, maybe, but it's not going to bring you the pot of gold that you require. I'm not suggesting that it's not something one has to consider, but I'm saying I'm not sure that that's where the solution would lie in the grand scheme of things. What about VAT? That's the obvious place to look. But recall, that is a retrogressive tax, and we're already finding the burdens are significant upon the poor. Logic would say that if we shove the VAT rate up by 2%, we could collect a significant further sum of money, and in fact probably either hold it there or smooth out some of the discrepancies that we've got. But then what do you do about the retrogressive consequences to which I've already made reference? Answer is transfers. The economic literature indicates overwhelmingly that if you not to have 3 or 4 rates, it's a disaster. It's inefficient, it's complex, and it's subject to fraud. And nobody in the world that we've spoken to, and I might add that I've had conversations with the Australians, the UK, and the US authorities, apart from the World Bank and the IMF, and goodness knows who else, over the last year, discussing these questions in depth. Nobody suggests that. The logic on the VAT system would be, could you up the rate? But you could only up the rate if you had a much more significant transfer system. Can you have a much more significant transfer system if you don't have confidence in the delivery of the transfers? In other words, obviously the trade union movement will howl like hell and say you can't have a higher VAT rate. But if you could show them that in fact it's far more efficient to target the poverty relief, it's possible that we could have a debate about this. My question, which worries me, and I'm mentioning this not because we've made any decisions about this, not because this is going to be necessarily our recommendation, but because this is the kind of debate we have to have. How would you then be able to ensure the kind of targeted poverty relief which would allow you to, in a sense, be more progressive in VAT and at the same time collect more money and reduce the burdens on the poor, which manifestly are problematic? And that's the kind of thinking which we are having to bear in mind at present. The second aspect about VAT that I want to mention, which I touched on, was the question of VAT and the gap. I'm not now talking about VAT fraud, of which there is significant. It certainly runs to a couple of billion a year. No doubt about that. Right? Significant. 20, 30 billion a year, maybe. The figures vary. I'm talking about significantly more money than that, because the World Bank has done a series of proper studies, just like this one that I'm quoting you, on the gap. We've never done this. How much should we be collecting? How much are we collecting? Why aren't we collecting what we should be collecting? Just consider for a moment that if the gap, as for example the UK found, was something in the region of about 12-13%. That is, in other words, they were 12-13% less than they should be. Assuming that we were that, and assuming we could bring that down to 8 or 9, well, then you've really got the extra money you need without any problem, without any adjustment, without any changes to the system. So one needs to know those questions. There's nobody in this room, I venture to say, who does, because we haven't yet done the hard yards. And that's why I said to you, one thing about this committee, we want to make sure that we've got sound empirical data upon which to make our recommendations. And that report is underway now. Hopefully by the end of the year, early next year, we'll have it, and that will add significantly to the structural questions that I've addressed with you. The third point I'd like to make is the question of estate duty and CGT. There are, of course, a lot of discussions about, well, if you've got CGT on death, do you have estate duty? I should tell you, one of the things that amazes me is that every fiscal economist that has given representations to our committee from overseas, of which there's some very distinguished ones, all have suggested that you should retain both. Because actually CGT taxes a different source to what estate duty does. And if you think about it, the one is a capital gain which is accrued throughout, the other one is actually what you pass on, and that the conceptual economic differences between the two. So there's a question we have to deal with there. But there's a bigger question. Some of you may finally have heard, it's come to South Africa, of the book by Thomas Piketty, Capital in the 21st Century. If you haven't, you better. Because it's probably the major text, the major economic text today, dealing with questions of inequality. Piketty, a French economist, has found that worldwide, the level of inequality in the world has gone back to what it was before the First World War. We are at a level of inequality which we last experienced pre-First World War, and we know what inequality did to the world from basically 1914 right through to 45. He also notes that the only time in the recorded history that he has, and he goes back some 200-300 years because French state taxes have been in place for that long, so you can start working in certain countries from tax data what levels of income are. He has suggested that only during the welfare state period, from 45 roughly through to early 90s, was that inequality addressed in any way. It's caused huge ructions in intelligent, intellectual, economic circles, one way or the other, the world over. It is extraordinary. Just been at Harvard this week, and it's extraordinary how this book now sort of dominates conversations. Why do I mention it? Because, hello, we are the most unequal country in the world. Huh? So the question is, what do we do about inequality? Piketty has suggested a global tax. Not going to happen, quite obviously, on estates, because what he says is that what is most pernicious is the way inheritances skew political power. That is, undeserving people who then accumulate vast wealth and influence the political process going forward. You have to look at the United States of America to realize how true that is. You may have heard of the Koch brothers. There are a whole series of people in the United States who sponsor the Tea Party and similar bizarre institutions. And so the question which arises in South Africa isn't so much that we're going to be part of a global tax, but should we not rather say, let's have a proper estate duty than fiddle with our income tax? Is that not a way round the problems of growing inequality and legitimacy? You may say no, but then you're going to have a good legitimacy argument as to why not. It doesn't collect very much at the moment, could do much more. I don't know. But I'm saying to you, we're just beginning this debate. But it's a debate that I would like to open up for a further conversation with people like yourselves within the context that I've addressed it now. I mean, you just cannot have your cake and eat it. You've got to assume that we've got to do something about the problem, on the one hand, of trying to ensure incentives, trying to ensure that our rates are competitive, but on the other hand, ensuring that the legitimacy of the system remains intact in a country where the vast majority of people are on the one decile and most of us on the other decile. So the problem with state taxes and CGT, I think, is back, not just in South Africa, worldwide. And if you haven't read anything of Piketty, go home tonight and just Google him, P-I-K-E-T-T-Y, capital in the 21st century, and you'll see what I'm talking about. The other issue which becomes very important, and that links to BEPS, of course, is corporate tax. And we have seen, interestingly, in many countries in the world, including our own, a sort of decline in corporate tax. That is, if you look at, for example, 213, shows the corporate tax revenue in South Africa declined from 7.2% of GDP in 2008-9 to 5.5% in 2009 and 10 to 4.9% in 2010 and 11, continuing to go down. It's recovered marginally thereafter to 5.1%, but again down to 4.9% in 2012 and 13. Now, you say, well, don't worry about it. But the answer is corporate tax is not an unimportant feature because it has importance. Firstly, collecting tax on profits at the corporate level is less cumbersome than taxing individual income tax. Otherwise, you'd have to use VAT, and then you're in trouble because of the retrogressive step. Corporate taxes often are an important backstop to personal income tax because in the absence of corporate tax, rich individuals will be able to park their money in corporations and defer tax indefinitely. Of course, the question of what kind of corporate tax is another matter. And one of the things that this country's had is a disastrously overcomplicated tax system, not just for small business, for anybody. Anybody who can tell me how the controlled foreign corporation rules operate over the last decade is either a genius or an idiot, because no normal person could. Right? And so, it's been a disaster. It is quite extraordinary to me, on this particular regard with corporate taxes, that when you go around the world, people say to you, actually the source-based system may well be preferable to the worldwide system. Well, we said that in the Katz Commission. Professor Katz and the rest of us who are on that committee actually said so. And nobody listened. And they changed the worldwide system. And then every year we had a reincantation of that. Section 9D in 101 different ways. Sort of, you look at that as a mind map, it's sort of, Freud gone mad. And so the question is, what do you do in relation to corporate taxes? Now, what we've been particularly concerned about, because of the BEPS, is how does one deal with corporate taxes in relation to multinational corporations? This is not a South African problem alone. It's an international problem. It's interesting now how many articles are published, for example, on Google's tax structure, the double Irish-Netherlands sandwich. Right? Everybody now knows about that. Amazing. What's the interesting thing about that is the following, that if you look just simply at the double Irish-Dutch sandwich, just for a second, and it involves, in their case, incorporating in Ireland an IP holding company, and then an operating company, and then a conduit company in the Netherlands, and the holding company then is the direct subsidiary of the parent company. It also owns the operating company and the conduit company in Holland. And then, but it's managed and controlled in Bermuda, but it's regarded as Irish for US tax purposes because it's incorporated there. And you then can ensure, through this wonderful mechanism, that you can charge, because you situate the intellectual property in the IP holding company, you can route all of the royalty payments basically through this particular company and through Holland and pay very little. I only mention it for one reason, because the way it works is because of the double tax treaties in relation to Ireland and the Netherlands. And I've said on previous occasions that one of the interesting things one needs to know in South Africa is where are the double tax treaties that are being used, which give us, let's say, our version of the Irish-Dutch sandwich. So one of the things we try to do is to say, well, how is money leaving the country? I'm not talking about the illegal money. Obviously, I don't know how it's leaving the country, save when people come before me when I'm sitting as a criminal judge. So one looked at, for example, the South African Reserve Bank data for the years 2008 to 2011 for non-good payments for those calendar years. And one discovers, for example, interestingly enough, that the two payments, if you work out that for the year 2011, some 56 billion goes out in this particular form, 56 billion. And you find that of that, some 41 billion in 2011 goes out for copyright, royalties, patent fees, legal, accounting, management, and consultancy services. 40 billion. So that's quite a lot of money, probably much more than that, but just take that as a simple proposition. So is any tax being paid on that? Now, I bet the answer is no. What one needs to know, and that's why one has to deal with this, is where is that going to? Now, if you find, and the Reserve Bank can give you global figures, which is why I say another empirical question we have to deal with. If you can find that those figures are being routed, say, in Mauritius, which I deeply suspect is the case, or similar tax havens, not havens, but tax countries, low tax countries with tax treaties with us, then, to be blunt, you do what other countries are considering doing, cancelling the tax treaty, or changing it. Because you are then effectively allowing, otherwise you're allowing multinational corporations to take all their profits out with any tax. and getting a huge deduction to boot. Now, I'm not saying you do that just automatically. What I am saying is, if you take corporate tax seriously, you have to consider that particular possibility. Are you saying that, oh gosh, we shouldn't do that, we'll be an outlier? Sorry, we won't be an outlier. All countries are trying to do that. The Australian tax authorities say they're deeply considering cancelling the Irish tax agreements that they have because Ireland is their point of abuse. Ireland doesn't have any political clout. And you say, well, doesn't that mean that we won't have people coming into South Africa? Well, I'm not sure, because the answer that you've got to ask yourself is, if other countries are also going to close the loopholes, then that process of tax competition takes on an entirely different character. But what I'm absolutely sure about is we have to take account of that. We have to take account of that. So in summary, what I'm saying to you is that the way we are thinking is, this is not about the shoving up of tax rates. It is perfectly clear that when it comes to questions of tax rates, by and large, it's quite hard to conceive of how you would increase the rates. I'm talking about, say, corporate tax. That would be perhaps really silly, because you do want to have a proper investment climate. It's quite hard to see how you could get huge sums of money in an economically efficient way by having increases in the personal income tax when 86% of all of that is the top decile anyway. And it's also quite hard to see how you could conceive of a society over the next 10 to 15 years as ours, which has a lower tax to GDP ratio. Because if what is going on, if I could just simply put it bluntly, at Marikana, may have a hell of a lot less to do with the Labour Relations Act, and a hell of a lot more to do with our social and economic climate, and the perpetuation of a migrant labour system, which, to our shame, continues 20 years into our democracy. Then it is perfectly clear that the question of the social wage, the provisioning of a decent education, decent housing, and decent health care for all South Africans is an imperative if in the long run we are to have social stability and progress. And so therefore, to think that you can push the tax to GDP ratio down is really to live in make-believe world. It is to believe in a world in which, you think that the market on its own, not even Adam Smith, I know the Free Market Foundation thinks so, but Adam Smith didn't, and he knew more about the market than the Free Market Foundation. And nobody believes in their serious mind that these aren't imperatives that we have to deal with. So if you're dealing with a tax structure in the country, it's not about reduction of the tax to GDP ratio. Of course, if we start growing at 6 or 7 or 8%, that's different. But Professor Knossen, one of the world's great fiscal economists who came and addressed our committee and who I've known for many years, when I asked him, what's your suggestion for growth? He said, I've got 3 suggestions for growth, and only 3. I said, what are they? He said, education, education, and education. And it's not about tax reduction. It's about how we actually educate a population to be in a global economy for the 21st century. And that costs money, and it also costs decent teaching and decent restructuring of education system. So what I'm simply saying to you is, I don't see how over the next decade we're going to see a reduction of a tax to GDP ratio, and rightly so. So within the parameters of a skewed distribution of wealth, a skewed income tax, personal income tax system, a VAT system which is clearly having impacts on the poor which it shouldn't be having, you can see that there's not much wriggle room. And so what I want to try to explain to you is what we're grappling with is, how do we make the system more efficient? How do we close the gap between the nominal and effective rates, which is absolutely crucial, which does mean that maybe you want to make some serious conceptual changes to the Act because it seems to me the Act is overly complicated and that becomes counterproductive rather than, in fact, conducive to investment. And how do you at the same time have some legitimacy in the system? So, meaning that if you've got a system like ours, it does seem to me that extremely wealthy people, and I'm not talking about people with 3, 4, 5 million, I'm talking about seriously wealthy people, actually may have to make a contribution larger than they've made before. I always say this to extremely wealthy people. We were extremely lucky in the transition from apartheid to democracy. And it doesn't seem to me so terrible that if you've only got 100 million rather than 120 million, that you're going to live a lousy lifestyle. Right? And I think Piketty's right. I think when, in fact, when inheritances go to the next generation who do nothing except count their money, I'm not entirely sure what the social utility of all that is. And so what Piketty has warned us about is the extraordinary instability if we do nothing. And so what I wanted to try to say to you this afternoon, I appreciate people standing so late, was to try to give you some context in which we're operating. Try to explain to you that the horror stories you're hearing about the fact that we're going to do this, that, and the other, and make recommendations, not true. These are the parameters within which we're working. Of course, we're aware in our small business reports that we've got to try as best we can to reduce compliance costs and to make the system simpler. In some cases, it's a tweak here and a tweak there. In some places, it's a question of actually ensuring that the bureaucracy works best. Whether this new department of government is going to make any difference, I haven't factored into my considerations. It certainly wasn't part of our recommendations. So let me make that clear. Right? But I don't know. What I do know is clearly that is something that we're dealing with. But the fact of the matter is that what we are concerned about in the main is not dramatic increases in the tax to GDP ratio, is not dramatic taxes in one tax or the other. It's trying to find the optimum system to produce the kind of goods and services that are required for social stability. And when you work with a system that actually to some considerable extent, as the World Bank study has suggested, is working, then you try to make it better, and you don't alter it radically. And it is making the system better. And if you don't believe me, if you think we had social instability now, consider what would have happened if, in fact, the tax and transfer effects, which had reduced the Gini from 0.75 to 0.59, hadn't taken place. Well, that would have made Marikana child's play. And it's that context which we have to work in. So my appeal to you is to think through these issues, obviously using the lens of your expertise as tax practitioners, but also to think about it as South African citizens, which is not necessarily dichotomous, but which is really important for us as we try to puzzle through how to make recommendations which fit into these parameters that I've hoped to have made slightly more clear to you this afternoon than previously had been the case. Thank you. Yes, of course I'll take questions.
Are there any questions that you would like to ask?
Let's stand there. There's one here, yeah. Can I just?
Yes,
carry on. Yeah, well, yes, please.
Thank you very much for your talk this afternoon. As far as increasing estate duty and so on, do we have the time to wait 25 years on average before you can actually get those estate duties?
Yeah, I mean, if you, sorry, I've interrupted you. You were.
Yeah, in other words, what I'm saying is, you know, if you bring that changes in like tomorrow, on average, the guys with estates of 100 million and so on, you're only going to get their portion 25 years down the line.
I appreciate that. I don't think estate let me make it clear. When I talk about a reconsideration of estate duty, I'm talking about it in the context of inequality and the legitimacy of the system. I don't think estate duty, if we had an estate duty suddenly tomorrow morning, we'd say, oh, we can reduce income tax by 5%. No, not at all. I think there are complications about introducing an estate duty which has teeth. You've got to start thinking through generation skipping devices. You've got to think through all of that again. And so I'm not saying that's what we're going to do, but I am saying, please understand one thing. You cannot have a society with the kind of skewedness that we have, right, and do absolutely nothing. That doesn't mean you've got to do a hell of a lot, because I've tried to show you already that the system actually is working, that to a large degree it actually has progressive effects. But I do think that we should think through, to be honest with you, if you've got a situation that you could actually get a buy-in from the country, that we could raise VAT and have, a transfer of a proper targeted poverty relief, and the cost of that would be a tougher estate duty, I'd take that tomorrow morning. So I'm saying that's the kind of debate which we as a committee would like to engage with. I mean, part of our work is to make recommendations, but part of our work is to, in a sense, try to inform an intelligent debate about the subject in this country, so that we can all feel we own the system afterwards. And that's why I'm just raising, this is why I was so grateful for the opportunity to speak to you, because it allows me to do that precisely. But I agree with you. It's not as if I look at that and say, aha, here's the pot that I was looking for. Not at all. I'd be far more interested in the gap between the effective and nominal rates of VAT than I would for tax collection. Yeah. Please.
Thank you, Judge. If you say that state duty targets the passing on, what has been passed on, quite clearly on a daily basis, monies go into discretionary trusts. So a lot of the passing on doesn't happen at the end of the lifetime. It actually happens on a daily basis. Now, an announcement was made, I think, in last year's budget. And I mean, quite clearly, the trust scenario is one where, there's been a lot of finger pointing. You haven't mentioned anything about it. Where does that fit into the context of the estate duty, and that we should maybe look at what's being passed on?
Yeah. The first proposition that you've got to ask yourself is, if you accept the Piketty argument that by ensuring increasing wealth in the second, third, and fourth generations, you don't necessarily increase the productivity of a country, and you do increase the inequality and, in a sense, the political power imbalances, and that therefore it is pernicious because it actually undermines long-term stability, then the issue is, well, how would you deal with that? Now, the problem when you have an estate duty is you're quite right. People use discretionary vehicles. But, firstly, that's become a lot more difficult, actually, because it's a lot more difficult than it was when certainly I wrote my estate planning book for the first time. Not that I'm trying to recommend a tax that is going to buy me more books, sell me more books, I'm assure you. What I'm saying is, clearly it's possible technically to think through the questions as where, in fact, how this is avoided. And that's why you'd have to think through things like generation skipping devices. You'd have to look to see how trusts are used. Already, I think trusts are a much more prohibitive vehicle for the purpose of planning than was the case, say, 10 years ago. All I'm saying is that when you first ask yourself a question, is this a tax that's worthwhile? And you have to answer that by saying worthwhile in terms of what? I agree with the gentleman here, it wouldn't be worthwhile in the sense that it would bring huge sums of money, but does it give you, does it lend some fairness to the system, which is not an unimportant value? Then you say yes, it does. Then you've got to work out what recommendations do you make which would allow it to be implemented in a way that is efficacious. But that's the kind of plan of the debate. Now, I can spend an hour with you telling you about what's been done in other countries in relation to that, and most have not been hugely effective, which means that you may come to the end of the thing saying, it's a splendid idea, but it's not worth the candle. All I'm saying is, it's something that has been placed back on the agenda, and one has to think seriously about. Yeah.
I just wanted to warn you that I'm also a supporter of Man United.
Sorry?
I just wanted to warn you that I'm also a supporter of Man United.
Oh, yes, sorry.
Very quickly, you see a lot of taxpayer money is spent on providing this anti-retroviral. You find a lot of taxpayer money spent on housing, low-cost housing. And of course, today, more kids go to school than ever before in the history of this country. So all of this tells me that these measures will go a long way in reducing poverty. And it also tells us that maybe taxpayers' money are spent a bit wisely than previously. So it's just to say that maybe it's not all it's not all true to say that taxpayer money is abused. There's a lot of opportunities where it's been spent appropriately, and these are some of the examples I've just listed.
Well, what I was trying to say was simply this: I think system's actually working quite well. I mean, that if you look at the levels of poverty and you then try to factor in the transfers that have taken place, like the social grants, which prop up the rural communities to a large degree, they've reduced the Gini coefficient, and therefore they've reduced levels of inequality. Now, beyond that, of course, we can debate where the money should go. But what I'm particularly intrigued by is if, for example, you listen to miners talking at Marikana, it's less about UMCU and a hell of a lot more about the fact that where they're going to have their money to educate their kids or their health or so on and so forth. And those are major problems. And in a way, the question is that there, it seems to me, it's less a question of money. Let me give you an example. The education system. I mean, we spend a higher degree of tax to GDP on education than many middle-income countries. But we're not getting our bang for our buck. So, I'm not suggesting we should spend more. It's a question of making it more efficient. All I was trying to point out was that the tax system does actually help address the problem. And by the way, when you mention Manchester United, you see, just shows you the extent to which inheritance is pernicious. Because if the inheritance didn't go to those Glazer children, right, then in fact my team would probably have a hell of a lot more money to spend on players. Yeah.
I have a question about the mandate of the Davis Committee and roughly around the discussion that we've had. Included in the complexity that's in the Tax Act at the moment around corporates, there's equal complexity and difficulty in the personal income tax space. And I know that a lot of it is not necessarily within the original mandate that's come out for the Davis Committee, but things like, for example, Section 8C, share schemes, it's one of those that's been piecemeal amended that now it's not really doing what it was meant to do, for example. So to what extent would the committee expand its mandate slightly to also consider the complexity and the difficulties that are now being faced in the personal income tax space?
You don't need to persuade me about that. I just, a year ago, had to deal with a very complicated case about share incentive schemes, and it struck me that the Act got more complex rather than less. I mean, frankly, some of the drafting, right, of our Act really beggars belief. Sometimes I think that the biggest problem about our Act, but much of our legislation, but certainly here, is I wish that they would just go to some senior counsel who's, I can name one or two obvious in the tax area, just to run it by them and get a proper opinion. It would make such a bloody difference if you think it through. It is part of our mandate, and we will deal with it. But, as I tried to indicate at the beginning, when you have the overwhelming laundry list, where do you start? It seemed to me sensible to start with small and medium-sized businesses, which is a crucial avenue. It seemed to me we had to get some normative framework to guide us how the hell to go through. And then there were significant pressures because the OECD are demanding responses from national governments by July, August, September this year on BEPS. So it seemed to me that's where we had to start. For obvious reasons, mining has become an absolutely crucial area, and that unlocks a hell of a lot of the solutions. But we will get there. One of the problems that we've had, and I think the Cats Commission, as being a member, had it as well, is that when you've got a group like, we're all part-timers, not one of us is full-time, it does take a bit longer, and we've been hugely indebted, I should say, to the tax advising community, all sorts of people who've done fantastic work. Without them, we would never have got as far as we have. But it is a part of the thing. It worries me. As somebody who teaches tax, I'm not happy at all by the complexity, and I don't only mean corporates. Of course, I mean individuals as well. Sure. Oh. Yes, please.
Thank you, Honorable Judge. I think the problem, or maybe to be more politically correct, the challenge that the country faces It's like trying to solve numerous problems by one solution and to maybe total disregard for the rest. My belief is that this country needs some holistic approach to the tax system. We've got many taxes, we've got many issues. We are good at distributing, but we are getting less on the productivity side. And we still have the cancer of corruption. So it means it needs a lot of a broader view than just looking at our taxes. If we have only 10 rand, we must live within 10 rand. And the only way we can live within that is to make sure it's used for value, not for corruption, not for collapsing RDP houses, not for fraudulent activities, ghost employees, ghost pensioners. So I think the problem, the issue is much broader than where we are. And one side, I concur with the judge that education, education, and education, because we are busy developing a nation of dependence, people who are dependent on handouts, instead of like eradicating these problems that led to people getting handouts. We're not accelerating maybe the development so that fewer people, far fewer people are left in the social net or social grant net, so that people are becoming productive, because we can also increase the revenue by having more people in that net. Thank you.
Yes, of course. I mean, you're quite right. You would improve your revenue if you had more productive people. I agree. And you're quite right. That's why one of the problems that I'm facing, just as a chairperson of this committee, is that I'm painfully aware, as anybody would be, that this is not just a question of fixing up the tax system. Unless you've got accountability on the other side, unless the money goes to where it should be going. And now, obviously, a lot of the money is going to where it's going. I mean, we shouldn't, let's get this clear. I think there's, I would be lying if I suggested there wasn't significant corruption in our society. We all know that. I mean, even the president talks about the fact that this is one of their priorities. Fair enough. Let's just leave it there. I can't comment about the politicians, the judge. What I can say is it's on the agenda. Nobody denies that. The question which is interesting to me is that the World Bank study shows that notwithstanding that, the system's working quite well in terms of what it purports to achieve. The tragedy is it could work a lot better. Think about this. I mean, you're quite right. If there was a complete ironclad commitment to eradicating all forms of corruption in our society, then manifestly, I'm quite sure that at the State of the Nation address next week, the presidential speech will talk about initiatives to eradicate corruption. Fine. So if those are implemented and they're actually taken seriously, and we get a serious commitment to that, I'm not for me to say whether we will or not, then my job becomes a lot easier, because quite honestly, suddenly we'll discover a hell of more revenue that we've got for a lot of this, and we could probably even reduce rates. But and one of the things that has saddened me throughout my discussions with business people, strange enough, is not that they think that a state duty or even a super income tax on say 5 million rand and more, whatever it is terrible. People say we'd pay that if we knew it was going to go to where it's supposed to go. And so you're right. My job is being hamstrung enormously by this prevailing culture of corruption. I can't, other than say, express the same frustration you feel.
Well, Dennis, thank you so much for taking time out to address us today. It was really interesting. I'd just like to touch on one or two small points that I noticed that really spoke to me. Was the first that you're obviously not in a position to tell us exactly what your committee is going to recommend, and we weren't wanting that, but I do have an idea of the process and the thoughts that will guide you in getting there, which I didn't have before. The second was that you're not working in the dark. When I look at the 5 points, the relationship between direct and indirect tax, the VAT, estate duty, CGT, corporate tax, BEPS, every time you spoke about them, You spoke about the need for sound empirical data. So that's great to know that, and that you guys are getting that. The third was that it's encouraging that South Africa is the most redistributive system of 13 countries studied. And the last one that really spoke strongly to me, if we don't have social stability in the end, what is anyone's wealth worth? So thank you very much for that.